Okay guys, welcome to the first episode of the new series in my channel called Trading for Beginners, a series that I decided to create to be able to explain you guys everything I know from this 3 years of experience in the trading industry and make things as simple as possible. Why? Because I've realized that basically on a daily basis, everyone tells me that trading is so hard, that everything is so complicated, that it's really complicated to start, but I don't definitely agree with that. So I want to make a series where I'll explain you guys everything I know the easiest way possible. So from episode 1 to episode, I don't know how many episodes I'm gonna do, but I'll make things very simple, trying to explain you guys the exact same way I would have liked to be taught. So yeah, I hope you guys enjoyed this new series. It's going to be very straightforward. I want to do it in a raw way without too many edits, without too many, animations and stuff. I want to do things very straightforward and literally straight to the point. So I hope you guys enjoyed this first episode. It's going to be about market structure and price action. Concepts I strongly believe that are key to starting your trading journey. So let's get right into the video. Well, let's just start with the first concept, the first episode of this series, and I'm going to talk about price action and market structure. Okay, so why is this important? Everything I'm going to speak about here, it's based on my opinion. So yeah, basically why I think price action and market structure is important. Because at least if you trade technical analysis, understanding how price action or how price develops and how it moves makes you realize how the market is performing, how the market is moving, where it's more likely for buyers to enter the market or where it's more likely to have some selling opportunities, right? So if you struggle to understand the market structure or the principal concept of the market structure, at the end you'll be a little bit lost in the markets when you want to decide if buying or selling, because at the end it can sound very simple, but it actually is. To be able to make money in trading, you need to buy low and sell high. Simple as that, as in everything in the world. So if you want to make money, you need to find, for example, let's say in some houses, right? If you want to do real estate, you need to find a cheap house that it's in a discounted price and be able to sell it higher and find someone that actually thinks that house is cheap. So they'll buy it, right? Simple. That's basically why understanding market structure is key. So I want to start by explaining basically, I'm going to make it very simple. I understand that there's a lot of different trends, a lot of different market situations, but I'll do the 3 main situations in a market, which is a bullish market, a bearish market, and a consolidated market, right? So first, let's start with what is a bullish market. So a bullish market is basically when price it's doing higher highs, higher lows, higher highs, higher lows. So before saying about higher highs and higher lows, let's draw it as a simple line. So what is a bullish market? Let's put bullish as a synonym of going up. So this is a market that is going up, right? Simple. But of course, there's different interpretations and there's different things about here, right? So when we say that a market is bullish, and like I said, it's when a market is doing higher highs and higher lows. So what's basically that? So let's also do it in a line. After this, we'll pass to understand and analyze everything I'm telling here, but with candlesticks. That's how most of traders in the world understand market structure. But let's do it now for a line that if you understand it with a line, you'll understand it way better after. So what's higher highs and higher lows? So we have this, right? I'm going to draw a simple bullish market, right? So that's a simple bullish market. So we can see that this was a high, right? So this was a high, right? Then price dropped, it did a low. And then what's a higher high and a higher low. So we can see that then price impulsed to the upside and created a new high. But this one, it's higher than this one. That's why it's called higher high, right? So this is basically a bullish market when price is being able to create new highs that are higher than the previous high and new lows that are higher than the previous low. That's basically a bullish market. It don't necessarily have to be as perfect as this one, but this is just for explication purposes. Now, let's go into what's a bearish market. Okay, so a bearish market, as we gave a bullish a synonym of going up, let's put a synonym of bearish of price going down. Let me actually write this real quick. Okay, so these are basically, let's say, the synonyms, right? So, bearish market. What's a bearish market? So, if we were analyzing that a bullish market, it's when price is able to create higher highs and higher lows, right? And it's going up. A bearish market, it's completely the opposite. It's when price is doing lower highs and lower lows in a constant basis, right? So let's basically draw a bearish market. So what's a bearish market? Well, when price is going down, right? But that's not as simple as that. Basically, a bearish market is this. Right? Simple, isn't it? So basically, we can see the same example, but let's move it. So let me actually do this. Let's change it, right? You remember this? I basically shifted the screen. It looks identical to a bullish market, but it's completely the opposite. Look, like this, like this. Bearish, bullish. Bearish, bullish. Simple. So why is that simple? Because we have a high, a low. Instead of doing a higher high, like in a bullish market, it does a lower high, lower low. Why lower high? Because it's lower than the previous high. Why this one is a lower low? Because it's lower than the previous low. So let me basically write it to make even more sense. So that's basically how the market looks. So lower high. So actually this was the initial high. Let's say that for example, the market was initially bullish, right? So this was the high, and then this is the lower high basically because it shifted. We'll speak about this later, right? So let's erase this to avoid any confusion or something. So you guys can see, again, very simple. Lower high because this high is lower than this one. Lower low because this low is lower than this one. And it keeps going and going and going, right? We can see market, it's going where? Down, right? Simple. Basically, this is very important to identify because that's how market moves. But I told you there was 3 ways, right? Now let's speak about the consolidated market or a consolidation stage. Okay, so now let's speak about a consolidated market or a consolidation stage. So let's basically change this one. Now let's put consolidation. Perfect. So this is the third one. Actually, I'm gonna give you a small trick. A consolidation stage is usually when the biggest traders around the world avoid trading because it's where there's a lot of manipulation, and usually the best moments when traders actually make money is when price is trending. So what's trending? When price is or bullish, so going up, so it's trading to the upside, or when price is going down, so it's trending to the downside. Simple. Bad consolidation. Now let's give it a synonym, right? Because we have a synonym for bullish, we have a synonym for bearish. Now let's give it a synonym to a consolidation stage. What's this perfect synonym? Price is moving nowhere or price is moving sideways. Let's do it here. Let's write it. Perfect. So that's basically the perfect synonym in my opinion. So consolidation means that price is moving sideways. Why? It basically explains. So we already know that a bullish market is when price is going up, so creating higher highs and higher lows, right? We already know that a bearish market is when price is going down, so creating lower highs, lower lows, right? We already know that. But a consolidation stage or a consolidated market is when price is moving sideways. So let me erase this, and this basically is doing this. That's a consolidated market. We can clearly see that price is not going up, price is not going down, price is just moving sideways. So if we actually decide to, for example, place a line here and a line here, we can see that price is not moving anywhere. There's no breakout structures, there's nothing than just sideways movement. So price is staying in the same direction. So this is very important to identify because, like I told you guys before, usually it's better, and it's proven that it's better to trade when price is bullish or price is bearish. Simple, right? So it's usually better to avoid consolidated markets. I'm not saying that trading consolidated markets, it's not like you can't make money. No. I'm not saying that. I'm just saying that it's easier, or not just easier, but bigger moves are made in bullish or bearish markets. Basically markets that are trending. In here, it's more complicated. So if you're starting trading and you decide to put some money into a trading account and start trading, just take this information I'm telling you here and look for opportunities when price is trending. So when it's bullish or bearish. So I went outside a little bit of the context, but yeah, I just wanted to say that. Okay, so why market is consolidated here? Because we can see that price is not making higher highs and higher lows, or lower highs and lower lows. No, it's just moving sideways. So price is not able to go higher than this, so basically breaking this high, or it's not able to break this low. Let's imagine, for example, I think this is the best way to explain it. Let's imagine that there's actually a very, very, very strong brick here, like a wall. Imagine the strongest wall in the world. It's located here as well as here. So let's imagine that this is a very strong wall. Literally, I don't know, of metal or something, that it's very, very hard. And that's why, and let's imagine that there's a ball here, and it's just literally bouncing from up, down, up, down, up, down. Imagine like a ball. Imagine you just throw very hard a ball to the floor, and it just bounces to the up, and then it bounces back to the downside and just stays moving like this without being able to go higher than the wall, because the wall is very strong, and it's so able to break the floor because the floor is very strong. This is exactly the same thing here. So price started here. So let's imagine that the ball started here, right? It went to the roof. It wasn't able to break it. It went to the floor. It bounced. It's just moving sideways. So there's no trending. Basically, in a bullish market or in a bearish market, that small ball we're talking about is able to break that roof, or it's able to break that floor. And that's why price is able, like the ball is able to go higher or to go lower. That's the easiest way I can explain it. Let's basically do another example. So I'm going to actually do this. So now that everything is erased, I think the best way to understand the three is to make a representation. So quick summary: bullish, price is going up, so the ball is not bouncing from a wall, or let's say from the roof, or it's not bouncing from the floor, so it's just going up, right? Bearish is when price is going down, so the ball is not bouncing from the floor. The ball is so strong that it's breaking that floor and keeps going down. Consolidation: the ball is going to the roof and it's not being able to break that roof, so it's going back to the floor and it's bouncing in a sideways movement, right? That's basically the explanation of the three. Now let's draw a simple explanation. So here we have price is going up. It's bullish, right? Then price starts consolidating, right? So we can see that price created higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then price consolidated and moved basically sideways. You can see that this ball here, when it reached here, instead of going higher and breaking this roof, it bounced, 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 bounced. Let me actually draw it better this way. Let me erase all of this. So let's do it again. So price goes higher, creating higher highs, higher lows, right? Until price reached to a point where I want to do it very precise for you guys to understand it way better. Right? And then price starts going low. So this is basically, I know I'm not the best drawer and I'm actually doing with my mouse, but basically this is the best explanation I can do. So we can see initially, what's this? Bullish market, right? Why? Because price, it's going up. It's creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. But then price reached to a point where it starts consolidating. So we can see that, let's imagine here's the ball, right? This is the ball here. It's not able to break this roof and it doesn't create a new higher high, but it bounces from this roof. And what happens when it bounces? It goes directly to the floor. And instead of breaking that floor, it bounces back and it goes up again to the roof. Is it gonna break it? No, it doesn't break it. It bounces back. It bounces, bounces, bounces until the ball gets so much strength, so much weight. Let's imagine that initially it was a ball like this, a very small ball, but then it ended up being a huge ball, huge of mass. Let's imagine mass like sellers. So there's a lot of people that decided to sell. So a lot of mass. Basically a synonym of a lot of selling power, a lot of selling positions, a lot of selling movement, a lot of selling volume. Went here, bounced from this roof, and then with all that strength, with all that mass, broke this floor. So this floor that was here, it broke it. Boom. Literally, it smashed that floor, it broke it, and it created a lower low. Then, what happened? It created a lower high. Why? Because this, it's lower than the previous high. This was the previous high here, right? This is lower. Then, it went down, creating a lower low. Why? Because this is the low here, and this is the previous low. And which one is lower? This one or this one? This one, right? So it created a lower low. Then it created a lower high because this high, it's lower than the previous high, which is this one. And it continues going down and down, doing the same thing. So guys, those are the 3 stages in the market structure or the price action, how the market moves. So when it goes up, when it consolidates, when it goes down. But well, everything here is drawings, everything here is lines. Now let's go to real life examples, watching the weekly time frame, which is a time frame where price moves very nice. So we're gonna see it with candlesticks, which is the best way to identify and analyze the price action in the real markets. Okay, so now we are here. This is the graph. This is real live movement of the price. And well, this is basically a little bit long time ago, so we can see that in the bottom we have 2010, 2011, 2012. So this is old price movement, but still it works perfect for the explanation, right? So you guys might say, wait, what's that? Like, that doesn't look as what we looked before. It actually looks very similar to that. It's just that maybe you're not used to seeing candlesticks, you were used to see lines, right? But it's the same thing. So let's start from here. Let's forget everything that is from this point. So I'm actually gonna move to this area, right? Yeah, perfect. So let's forget everything that it's from here to here. That will make things easier for you guys, right? Just forget everything that it's from this side to that side. So let's just focus on this area, right? From this low. So what we have, if we see, for example, we can see exactly the same thing we were speaking about. So what we have here, a low, right? This is a low. So what does price do? Creates a high, and then it creates a low. What happens with this low? It's lower than this low, or it's higher than this low? It's higher, right? So it creates a higher low. And then what does it do? It goes up again, creating a higher high. Why? This was the previous high. It creates a higher high. Then what price do? Goes back again, creates another low. Then it goes here. What does price do? Creates a higher high. This is a higher high. Then it goes down, creates a higher low. So let's forget about this movement here. Let's just focus on this one. So this one here, it's higher than this low here. We can see the difference, right? It's higher. So after creating that higher low, what does it do next? Goes up again, creating a higher high. Then it goes back, higher low, up again, higher high. Then you might be asking, well, where's the next higher high? There's no next higher high. We can see that price after that went down. I'm not gonna speak about this yet. I'll do it in the next video. But we can see that price went down. Then it went up, right? Then it went down. Then it went up, down, up, down. Is there actually some movement, like clear movement to the downside or to the upside? Are we seeing something like this very clearly or something like this very clearly? No, right? So what does this means? What is this area? I want you guys to answer in your houses. Is a consolidation stage, right? Let me actually erase everything I've drawn so far. So we can see that after having the movement to the upside, then price started to move sideways. Basically like this. That basically means we're in a consolidation stage. We can see that this high hasn't been broke to the upside, neither this low. So we were in a consolidation stage all this area, right? That was a consolidation stage. The best way to understand it, let's go back to the explanation. Let's imagine there's a big roof here, and let's imagine that there's a big roof here. So you might be asking, hey, Esteban, why this is not equal or very similar to the last drawing of the consolidation stage you drew? Because in real life markets, price is never perfect. So remember that we drew something like this. We drew the consolidation like this, right? So every high was literally the exact same high, and every low was literally the same size of the other low, and that the top was perfectly aligned and the low was perfectly aligned, basically like the roof and the floor is perfectly aligned in both sides. That never happens. It's just a drawing, it's just an explanation for you guys to at least be able to figure it out by yourself and understand a little bit the idea of it. So if we drew it and tried to make it the most simple way and the most similar way to what I drew before, let's imagine that there's a wall here, that there's a roof here, which is this one, right? We can see the roof, this gray rectangle, and we can see the floor, this gray rectangle. And we can also see how price is bouncing from the roof and from the floor. It's not being able to break both sides. So it's doing this. Bounce, 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 bounce. So in other words, even more simple as the way I explain it is price is just moving sideways. So compared to this movement, we can see that price is clearly going up. In this case, price is just going sideways. So we're in a consolidation stage. Now, let's see what happens after price is able to break this floor, right? So remember, there's a moment here when the ball gets full of mass. So it started being, let's do it again. It started being a small ball, then it's a huge ball, right? It starts getting stronger and stronger. Let's imagine that every time the ball reaches the roof and it reaches the floor, every time it bounces, it gains a lot of strength and energy and power. And let's put that as a synonym of selling power in this case, right? Gets a lot of selling power, a lot of selling positions, until the ball is so huge that it's able to, it breaks the floor, right? So now the consolidation stage is over. Now let's look what happens. We can see that price started to create a downtrend move. Why? This was the previous high, right? It went down. So it broke with a lot of strength this resistance level, or basically this floor, right? Where it was bouncing. Then it created a low here, then it created a new high, and this high, it's lower than the previous high, which was this one. This low, it's lower than the previous low, which was this one, right? What happens here? So if this is a lower high, and then boom, it goes even lower, creating what? A lower low. This was the previous low here, this one here. Now this low here, it's lower than this one, right? Let's erase this. What happens next? So it goes here, 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 boom, creating a new lower low. So this is the new low, this was the previous low. Which one is lower? This one here or this one? This one, right? Because price is going down. It's very, very simple to understand these concepts, right? Then price goes up. Then what happens? Okay, you might ask, okay, what happens here? Wow, it changed direction. Why didn't create a new lower low? Literally, like it should have, if price was going down, price should have done something like this and then this, right? Creating a lower low as this example. So we can see that in this example, let me erase this. We can see that in this example, price went here, here, right? So it went up, creating a lower high. So this one is lower than this one, and creating a lower low. So this low is lower than this one. But now price, what it did, create a high here, and instead of going down, creating a lower low, what happened? Well, price created a higher low. So when price created that higher low, what does that mean? Well, it looks like it was in a downtrend move. So price was going down in here. Now it pretty much looks like it's not going down anymore. It's going where? Up. So why it's going up? So as we can see, what happened here was, so this was the high here. This was the low, right? And price, instead of doing something like this, a new lower high and going down, creating a new lower low. So this was the previous low, creating a lower low here. What price actually did was the following. So went here, right? Creating a lower high. So this was the previous high, creating a lower high, creating a lower low, right? As we already know. But then it went up. What happened here? It created a higher high. So this was the previous high. Instead of creating a lower high, it creating a higher high, which is this one. And then what happened? Created a higher low. This was the previous low, right? When we are in a downtrend, we can see that price is creating lower lows. But here, price created a lower high. This one is higher than this one. And then what happened? Boom. Higher high. Then, boom. Higher low. Then, boom. Higher high. And then what happened? Instead of creating a higher low, because we were bullish, we were going up, price decided to create a lower low, changing the structure now to the downside. So basically, we can see that we are never gonna see a perfect market where it's constantly going up or constantly going down or just constantly consolidating. Price shifts direction in a constant basis. Here we're in a weekly time frame, so we're seeing price in big candles, we're seeing movement in big moments throughout the years. So every time we go into the markets, we can see that price, some moments in time, price was going up, some moments in time, price was going down, some moments in time, price was consolidating. So this is key to understand. This concept is very, very important to understand. If there was something that you didn't understand, just go watch the video again and you will be able to understand. But simple terms, sometimes price goes up, sometimes price consolidates, sometimes price goes down. There's never a perfect moment when price is going just up directly or just down directly without stopping. Price is always like this. So we can see in instant shifts. So we can see that initially price was going up, right? All this movement. Then it consolidated. Then it went down. Then just from a sudden it went up. Then just from a sudden it went down again. We can see here. Then it went up. Then we can see kind of like a consolidation stage. So we can see here. Let's imagine here the roof. Let's imagine here the floor. Price is what? Consolidating. Then we can see a lot of strength. Boom, it broke. So downtrend. Downtrend. Then a little bit of uptrend. So bullish, then downtrend again. So that's how the market moves. So I hope you guys, with this explanation, let me actually move my camera again. So yeah, much better. So I hope you guys were able to clearly understand the different moments in the market. I know there's more than 3, but in my opinion, if you actually understand the 3 moments, or when price is going up, when price is going down, and when price is consolidating, you'll be able to enter to any chart right now and really understand and say, hey, price is now going up, because it's creating higher highs and higher lows. So if I buy, there's more chances that if I find a great place to buy, I'll make money, right? Because price is going up. Okay, now price is consolidating. Well, maybe this is not the best moment to invest because price is just bouncing from highs and lows, so from the roof and from the bottom, without a clear direction. And oh, price is now in the downtrend. So price is now dropping, which means that sellers are in power, which means that if I decide to buy an asset, maybe I should wait for a second to see if maybe price is able to drop a little bit more and I reach maybe a discount to buy lower, right? Because actually people in the world right now is considering that that asset is expensive, so they are selling. That's why price is going down, right? Simple, very clear. So I really hope that with what I explained you guys, it was a little bit long the video, but I think that it's key to understand these concepts before starting to trade. So I really hope that you guys were able to understand everything. I tried to explain it the best and easiest way possible, and that maybe in the future, if you don't really want to trade, but at least you wanna enter into a chart and, I don't know, let's say, hey, how's Tesla going? You're able to identify, okay, this is bullish, this is consolidating, this is bearish. If I achieve that, I'm very, very happy, and that's basically what I wanted. So without further ado, the next episode, I'm gonna speak about 2 concepts: break of structure and change of character, right? In all the video that you just saw, you were able to see, and I spoke about when price was, for example, in a bullish trend, so going up, and then it drastically shifted and change direction going down. So let's say, for example, we were seeing some price going up, so creating higher highs and higher lows, and then just from a sudden, instead of creating a new higher high, price created a lower high, or price created a lower low, like just from a sudden. That has a name, and that's key to be able to identify great positions, basically to buy or to sell an asset. So what you just saw was basically how to identify if a price is going up, if it's consolidating, or if it's going down. In the next video, you will be able to identify the best moments where we might be positioning ourselves to buy or sell an asset, which are basically in those moments where price is shifting. So for example, a change of character, or where price is just breaking structure. So remember what I said with the ball, that is just full of mass, full of energy, and then it breaks. That's called a break of structure. And that's very, very important to also identify, because based on that, we can look for discounts or for reversals to be able to position ourselves in the market and make some profit from the moves in the market. So yeah, so like I said, next video is gonna be about break of structure and change of character. So I hope you guys enjoyed this video. If you really liked, please subscribe to my channel, give me a thumbs up. As you guys know, most of the mentors out there sell this information I'm telling you guys for free, sell it and make a lot of courses to be able to make some profit. I just decided to create this completely free for you guys. So you can literally watch it how many times you want. And like I'm telling you guys, I've paid a lot of money for people around the world to teach me the same things I'm teaching you guys today, and I'm doing it for free. So if you really want to support myself, just subscribe to my channel and give me a thumbs up. That's the best way you guys can support me. I'm not asking for any money. I'm just asking for your support. So yeah, I hope you guys enjoyed this video and see you guys in the next one. Take care.